Is it time to find a new tax team? In this upcoming episode of Profit with a Plan, I'm joined by David Snider, CEO of Harness, to dive into forward thinking business tax strategies that could shape your company's future. We'll be tackling key questions like: are you maximizing the tax advantages through your smart business structuring? Is your tax plan aligned with your long term goals? And how you can have a proactive tax advisor fuel your growth. Whether you're eyeing future sale or you want to just get ahead of the game, this episode is packed with insights on how the right tax strategy could save you thousands and position your business for success. So it's time to discover if it's time to rethink your tax team on today's Profit with a Plan. Hey, entrepreneurs, are you ready to boost your profits and grow your business? Welcome to Profit with a Plan, where we share strategies to help you scale your company, increase your profitability, and set up for a successful exit. I'm your host, Marcia Riner. I'm a business growth strategist and the profit booster behind Infinite Profit. And I've helped countless entrepreneurs to build highly profitable and sale ready businesses. See the more profits now and a bigger profit later. Today's episode is sponsored by Infinite Profit, where we don't just talk profit, we deliver it. And if you're ready to take your business to the next level, visit Infinite Profit Consulting and start boosting your bottom line today. But before we dive in, I've got something really special for you. Thinking of avoiding those profit plateaus and those operational headaches, and how about those pesky road or growth roadblocks? Well, go grab my Profit Booster playbook at boostingprofit.com, where I share 3 essential strategies to elevate your profits. All right, let's jump into today's episode. Our guest today is David Snider. David is the founder and CEO of Harness, a wealth technology startup dedicated to making bespoke tax and financial advice accessible, intuitive, and valuable through a holistic wealth platform. Before Harness, David was the COO and CFO of Compass, which is a real estate tech company that helped grow from a pre-launch to valuation of 1.8 billion. David was an investor at Bain Capital, where he completed investments worth over 2 billion, as well as an IPO of Sensata on the New York Stock Exchange. He is the author of Moneymakers: Inside the New World of Finance and Business, published by Macmillan. David has earned an MBA from Harvard Business School and a BA from Duke University. So David is highly capable of talking about tax subjects and growing businesses and valuation values. So David, welcome to Profit with a Plan today.
Thank you, Marcia. Great to be here.
Great. So, you've had a really huge wealth of experience in the world of business. So, answer me kind of a question. Why did you step out of big business and step into a little bit more of the smaller business and helping with tax and financial ideas?
Well, I think first off, both this business and many of the things that I've done have come out of mistakes. So while the resume may sound impressive, a lot of what drives what we seek to create is helping people avoid some of the mistakes and missteps that I had, and that was a 7-figure tax miss and asking the wrong people for guidance on equity plan structuring when I was the CFO at Compass. And honestly, there and even in starting Harness Wealth, having missed some things related to the R&D tax credit and other stuff where no one can know everything, but having sort of the right advisors, right team, right guidance to help navigate those things on a forward-looking basis can unlock a lot of value that it sure is painful when you miss it. So that was kind of the driver on the opportunities. I'm not someone, honestly, who I'm sure many of the people listening are folks that always felt like they had to run their own business and thrive in that environment. I think I was very happy, as someone at a much larger organization. But when I stumbled upon opportunities in spaces where I felt like there was something that ought to exist when I couldn't find that thing, I decided, it was worth making a run at actually creating it. That was sort of the genesis of the book that I precociously wrote about business before I'd ever worked in business while still in college. And to some degree, the narrative on Harness, which is now, over half a decade old and helping thousands of folks.
You know what? A lot of people that I talk to that come into business as entrepreneurs, they've come out of corporate and they said, "Oh, I can do it better," or they've had this kind of thing since they were a kid in a lemonade stand. But there's no one way to get into entrepreneurship. So I'm glad to hear that, you thought, "Hey, I got to solve this problem that I had that was huge and, financially, you know, uh, damaging." When you get hit with an opportunity or the problems that occur when you don't know what's going on and what opportunities you could have taken, and get hit with taxes. I mean, nobody likes taxes, right? We all want to pay as little as possible, our fair share, but as little as possible.
Optimized.
Optimized,
Yeah.
that's the best word for it. So, we're glad that you, found the problem, and sorry you had to suffer through it, but now, I mean, you're here and you're helping so many people, as you mentioned, thousands of companies. So, I'd love to get into the idea of, and I've spoke about this in the past, but it's always good to kind of set the stage. Um, what's the difference between tax planning and your traditional CPA?
Yeah. Well, thank you for asking. I mean, I think for business owners, there are really a few elements to this. There is um, tax advisors often interfacing with an attorney and helping to set up your business up front with the right structure. There is tax compliance, which is making sure that you're paying, enough that no one's coming to knock on your door. If they do, you've got, good justifications for what you've paid them and shared. There's bookkeeping, which is obviously support around the financials that feed into the tax stuff. And there's proactive tax planning. And I think most businesses do some form of the first three, and it's often the fourth, which can be the most valuable, that gets missed. I mean, there are very few business owners that I meet outside of maybe sort of a financial guru with some passion for tax that really want to be thinking and spending a ton of time on this. But as you sort of alluded to in the intro, you know, tax for many businesses outside of probably your payroll people costs is going to be one of the biggest line items. And so it is important to think about it in a proactive way of, um, are there things structurally that, I or we as a business can do that's going to help to optimize? Again, not to shortcut it, not to do anything that's not appropriate, but to make sure that you are positioning yourself in a way that you can invest as much capital in the growth of the business or your own success, rather than missed opportunities of stuff that's out there.
Exactly. So many people think, okay, I'm so busy working in the business and putting out fires and chasing customers that I'm not thinking about taxes until it's often too late. Right. And that's why I wanted to have you on early enough, before the end of the year, to be able to say, hey, there are some opportunities that you can look at. And some of those are done earlier on in your business, and some are done early on in the year, but I would encourage people to really have that relationship with someone like you to be able to say, okay, taxes were paid. Now let's figure out how we can do this better for next year and have it start early on in the year and have that continuous conversation that goes forward with it. The last thing you want to do is go, okay, it's Christmas time. What can I do to save my taxes before, or worse, it's January 15th and you're filing your 1099s and your W-2s and you're going, "Oh, what can I do?"
Yeah.
It's too late.
Totally. And I think a big piece of it that often is also missed is for business owners like us, there is not just science, there's real art in thinking about
Mm,
quarterly estimates. We're not W-2 folks principally. And so understanding on a real-time basis, what is that tax liability based on maybe last year was a down year, so you can be in safe harbor and actually save paying a lot more along the way. Where in the reverse, it maybe you get a great year in, 2020, 2023, And then the next year, it's like, hey, I can do something different to kind of optimize what I'm going to owe without racking up, interest and penalties from doing so. So I think that's one of like the seemingly most banal, but also, quite valuable when it comes to like, we want cash as soon as possible. We want to, collect early and outlay later. And so that nuanced process of what is your safe harbor threshold? Where do you have to be providing estimated taxes? Where can you sign up? Roll that further into the future, the next year, et cetera, is really important, even after making those foundational decisions about business type. And are you a single member LLC or a partnership or a C Corp, that all have different pros and cons?
Well, let's kind of tap into that briefly, because a lot of the businesses are already kind of set in place, but that doesn't mean you can't evaluate and potentially change. What are some of the advantages to the corporate structure that would help business owners keep that cash flow moving?
Yep. So I think, one of the, since a lot of your listeners are fairly sophisticated, I think one of the more nuanced considerations was post the 2017 tax cuts and the state and local tax cap coming into place. It became much more important for income, ideally, not to flow directly to the individual. And so, even for someone who might have been totally fine with the straightforward nature of sort of the single member LLC, there might be reasons to think about, that multi-member LLC or something where the entity is opting to pay the tax rather than you, even in running your own business. That helps, with a pretty meaningful amount of potential incremental state tax that you're essentially not getting credit for on the individual side, but you can take advantage of on the business side. So I think that's one like very concrete example. Obviously varies on the individual of, in many cases, even a thing that wouldn't have mattered to your situation X number of years ago, every time that there is a meaningful tax change, it's worth reevaluating that. And I think that was similar to, if we go back in time to, I think it was around 2012, coming out of the Great Recession, there was a program put in place called Section 1202 to incentivize investment in small businesses. And that allowed for businesses that met a certain set of criteria for the equity holders to have up to 10 million of profits or up to 50 times the investment to be completely tax-free on a federal level if that investment was held for over 5 years. And so that was something where if you asked your tax advisor, a year or two before, hey, does it matter from a C Corp or not? The right answer, and the only answer was maybe it didn't in your instance. But fast forward, there's a policy change, there's this huge tax benefit of having been in a different entity type. So I think it's always worthwhile, even if you are, as you mentioned, you created this thing, you're running, you're trying to build your business, et cetera, making sure that whenever there's meaningful federal change, or maybe in some cases a meaningful state change, or you're moving states, et cetera, that you're reevaluating with
Mhm.
enough frequency that you don't miss what, in my case was a very large policy change,
Opportunity.
an incremental tax bill, as a result of that, going back a number of years.
Well, you know what? I think that many CPAs or tax professionals that are helping businesses might not be um and I don't want to take down any tax professionals, because I have lots of friends that are tax professionals, but there's more two types. There's one that says, I'm going to look backwards and cut your taxes, and we're going to look at the last year and save every penny we can pay. And then there's those like yourself that are looking forward, and there's opportunities. And I think it takes a lot of education and a lot of knowledge and thinking on how your tax team thinks going forward, right? Are they proactive? Are they looking for opportunities? Are they looking for ways to say, hey, Marcia, your company, you're set up like this, and you probably want to consider now, due to these new tax rulings, that there's some changes going. You might want to consider doing something else. But if you only talk to your tax person one time a year, you're not going to get that advice.
Yeah, I think that's absolutely right. I mean, there are really almost three tiers. I think there are a lot of people with an accountant, CPA, enrolled agent even, that they like, and they sort of leave it at that. And like the job gets done, they don't think about it. And that person may not even know if the right question was asked, how to guide someone, you know, those are the more dangerous relationships because you don't know what you don't know, and they don't know what you need to know. I think the
Right.
second
The
tier,
blind
which
leading the
can be
blind is what
fine,
it sounds like.
yeah, I think, but that more commonly that's the case. It's like you inherit it from an aunt or an uncle who liked this person, or you knew them, etc. But maybe they don't have the sophistication for the fact that you don't have a multi-state business, or that
Mm.
you're invested in whatever, an MLP or in private equity or something else that they sort of are getting by, but really can't help you strategically. I think the second, which can be totally fine, which is the majority of tax advisors, is they're not going to proactively think, oh, there was this change. I need to reach out to Marcia. Her business is growing. Here's the implication. But if you ask the question, they're going to know the right answer and at least tell
Right.
you if it applies to you. And so you
But then
should,
that puts all the weight on me that I've gotta, here I'm running a business and got a family and, got all this stuff going on, and that I've gotta listen, watch the news and go, "Oh, there's a tax change. Huh, I wonder if that has any implications to me," right? And
yeah,
I'm a manufacturer, I'm it's not something that's, in front of my vision all the time. So that's why it's always kinda scary that we rely
yes.
on these people to do so much for us, and if they're not,
Right. And then the
having to.
third category obviously is the one that I think we aspire to be, and hopefully many of your listeners have or look for, are ones that are being, proactive around this stuff. And I think you can also tell a bit based on the mentality of the person working with you. I think there's some where it's like, hey, I just either I'm fine with things being the same, or I'm fine just like taking more compliance clients, et cetera. I think it's the advisors that aspire
Mm,
to have fewer but higher value clients are probably ironically the right ones. I mean, yes, they're most likely the ones that want to raise prices over time, but that should be aligned with being focused on driving more value to the clients that they really want to invest in. And so I think making sure that you've got an advisor that wants to make the investment in you, not being so short-term oriented if they want to charge more, but they're going to provide a lot more value, that's something that, not categorically is beneficial, but that, you evaluate, hey, what's the ROI you could get from having the right advice to ensure that relationship is more strategic.
exactly, and thinking about that one, how does your taxes align with the goals that you're trying to do? I mean, if your tax advisor is looking constantly backward and they're depreciating every opportunity they can, when you're trying to get some financing or you're trying to plan an exit, those are two different tax strategies that you're aligned with. So I think we as business owners have to align with the right tax people, but we have to communicate where we want to take this business in the next, year to 3, even 5 years. And if you can communicate that with your tax advisor, instead of something that's backwards looking, or reaction based, then that advisor can come in with some great strategies that will help improve the situation you want to do, right?
For sure. And I think that relates to whatever you aspire for the business's outcome to be. I mean, even if it's, hey, I want my son or daughter to take over the business, that also may imply certain things around transfer of ownership, equity, when it gets valued, et cetera, which is very different than someone saying, hey, within the next 3 years, I'm hoping to sell it, and let's evaluate whether a asset sale or a stock sale is going to create more value for me or drive up the purchase price. So
Well,
completely
and
agree
it's
with
not
that.
always it's not always about exit either. You could be interested in acquiring a competitor,
Mhm.
or you could be interested in taking in manufacturing. You may be wanting to buy new plant equipment or expand or scale. And I think if you're thinking in the way of saying, this is a tax advisor and this is a financial expert on your business. And I think you want to loop them into your plans and ideas and designs so that they can help you financially prepare for the next phase of where you want to go.
Yep. And I think going back to where we started the conversation, you know, the best advisor may not be the best bookkeeper. And just because you have someone that's doing checking the box on certain things, like it's depending on the scale of your business, it may be okay to have different functions, different people. I mean, I think, there's a piece of it you want, which is low cost, high execution, getting the job done and getting it right. And then there's other stuff where you can have differential value if you get the right insight, for
Yeah.
all those reasons.
I love it. I love it. So, so let's talk a little bit about how we can fuel our growth because the legs on this podcast is increasing revenue and driving growth with the ultimate goal of being able to sell your company. Not everybody's thinking of selling, but those two factors boost the last one. But when we're thinking about growth, how can a proactive tax advisor help us with growth in our company?
Well, I think certainly to the extent that you happen to operate in a business or a region where there are credits and incentives that can be really valuable. So I think, one that a lot of businesses in the technology space, don't think about for a while is sort of the R&D tax credits where actually you can get a meaningful tax break on your payroll taxes if you're thoughtfully doing the analysis on, hey, I'm actually employing people that's creating some new technology, software, et cetera, as it's defined. So historically, that was just a credit that you could use against profits. If you're a business that maybe, break even, that can be something that in, that immediate period actually can offset payrolls. That's really valuable. And there also are parts of the country where there are state level programs like in upstate New York, we're based in New York. You can get credits for hiring people and stuff like that, is advantageous. I also think that strategic accountants, when you ask the right questions, can be helpful on understanding your working capital cycles, almost like a business advisor to some degree. Not that they're going to advise you on like raise your price or do anything. It's more of a business decision for you. But there may be things around the terms that you're accepting payments, or if they're really in your books and can kind of see, hey, your P&L looks great, but like these balance sheet metrics kind of stink. That's not the case for all, tax advisors, but there are three different financial statements for a reason, and that they all are telling you something very different. And so just because your P&L looks great, that this year's revenue is more than last year's, that two businesses that have exact same P&Ls may have highly different cash needs. And so when it comes to growth, the best kind of growth is growth that you're not financing out of your pocket, you're financing with your customers' dollars or with, other resources. And so I think ensuring that the combination of any internal finance resources you have with a more strategic CPA can help make sure that your, cash flow matches up with what you hope, balance sheet can look like. And your obviously your P&L and kind of the general performance.
I love that because that's something that again a lot of business owners rely heavily on their financial team to produce the documents, right? To be able to analyze and reflect on the data that comes out of those documents to help the company and the business owner make the best decision for moving the company forward. And I think having that advisor who can say, yeah, sure, your P&L looks great, but your balance statement is a mess. And have you thought of possibly doing this? And instead of taking your cash flow to buy the new equipment, or we've got these opportunities that are available because more so than the business owner that these opportunities are available, and hey, let's align with a financial tool that I think if you offset this or that, but the business owner again is relying on those professionals to come in and help them analyze the data of what the company's actually doing. So I
Totally.
love that. That really brings a new look on your tax professionals to be able to come in and give those advice. So when we're looking at different angles for growth in companies, where are some of the missed opportunities that today's business owners aren't grabbing? Like you mentioned, those tax incentives to hire and create new technology. But when we're looking at maybe the balance sheet, as you said that there were some challenges there or missed opportunities, maybe where should they look?
Yeah, well, I think it varies so considerably based on the industry, but I would say kind of like what I just alluded to, um, the cash flow cycles can be so different predicated upon how you think about, charging your clients and paying your own expenses. So I think that's one of the biggest ones in helping to bridge that gap. I think, like we had talked about a little bit earlier, um, understanding when you actually, whether you're a sole proprietor or you're, a multi-million dollar revenue generating small business, um, understanding when there's a cost to paying certain things, namely your taxes, or when you can defer some of those cash outlays. And again, have the growth, be bringing in new business, but not necessarily, again, having to raise capital or pay out of pocket to be able to hire more people to take on that demand or to finance your cost of goods sold or something like that, is the biggest piece. And I think, now they're also, which is not what the CPA drives, but more nuanced ways to think about lending as well. Like we see a lot of business owners where it's like, oh yeah, I just got it on a credit card, paid whatever, racking up 30% interest when there are lots of different vehicles that hey, all you need is a AR revolver, or all that's really needed is something for inventory management that's less than half the price. That stuff matters. And just strategic CPAs can sort of help identify, interest expense, other things that are driving, again, a suboptimal path for growth. I'd also give one insight a little bit different from sort of wearing the tax advisor hat, in that at Harness, our goal is powering, these tax advisors and helping them thrive. At Compass, the prior business that I helped build, it was helping real estate agents, who are also small business owners, thrive. And um, one of the counterintuitive things that we've seen in the generation of new business for especially advisors, which is only a small subset, I'm sure, of the people that listen to the podcast, um, lots of them sort of say, hey, I want to grow. I want to be, you know, attractive to anyone who might need my service. I can figure it out. I can do this industry. I can do that industry. What we found time and time again, at least in these two different professional service verticals, is the more specialized you can seem, and whether that's on your website or a specialized landing page or a one pager or the referral from a client, in the needs of a very specific persona, the faster you can end up growing. And so the wealth advisor that really focuses on owners of dental practices, you might say, oh my God, that's got to be this micro market. How can they possibly do well? Ends up growing 4 times as fast as the person who's equally bright, equal amount of sort of tools and resources, but says, I can do podcast hosts and I can do lawyers and I can do this, I can do that. And that generic nature kind of comes through, and no one who comes there says, oh my God, Marcia is unequivocally the best person to serve me. So that's one other more like anecdotal piece, just having spent the last 12 years helping to power small business advisors, where they're in part selling themselves and the advice that they give. I think the more specialized that, you can have lots of specialties as long as you speak to them in the right conversation, the right way for that prospective client, can drive disproportionate growth that we've seen across, now several thousand advisors I've worked with across those two businesses.
I love that. Niche marketing is in niching down is so important to growth. And but I mean, oftentimes, how do you analyze the numbers that you're getting from your tax professional, right? If you don't have the professional that's able to look and go, oh, well, you know that you've got 60% of your clients and most of your revenue coming from this niche. This might be an opportunity for you to develop more. Have you thought of that, right? It's just coming in to say, I'm seeing things that you can't see in your numbers, and maybe that's the path that you can, leverage and get the growth that you're looking for. So having definitely the proactive advisor on your team, to be able to help you make those decisions is always the best path, I
Yeah.
think. So I agree with that 1,000%.
And maybe just to add on to that, the one other category we didn't really talk about that some tax advisors do and some really don't, is the sort of the concept of the outsourced CFO,
Mm.
which can be a component, of what your tax firm is providing, but isn't automatically. And I think as your expectations or what you see as potentially the opportunity around customer segmentation or, forward financial planning for your business, finding an advisor or team of advisors that includes that type of capability may also unlock a lot of value, as you're alluding to.
Exactly, exactly. I think there's so many different lanes and opportunities that business owners can grab onto, especially in the financial realm like this. I mean, you really want a team that can help you dial in your numbers, understand the data that comes out of it, make good decisions, financial decisions, tax decisions, and I promise you, listeners, that you can't do it alone. You shouldn't do it alone. Ask for help from these professionals that know how to guide you and move you in the direction to improve the outlook of your company and give you that opportunity that you may not have just trying to do it yourself. So, knowledge is king, definitely. I think that we uh, we often forget that it's like, oh, but I can't afford, or I don't want to spend, or I don't know. That's where the advisor team comes in, and having that tax and financial advice on companies like Harness is really the key. So, David, we can go on and talk about this subject and give advice to the audience for a long time, but we are wrapping up here. So, where can listeners find out more about you and Harness?
Thank you. Well, yeah, I think what's nice, and it's sort of a good segue to what you were discussing, at least with the Harness platform and our advisors, the first conversation has no charge. So I think it's always valuable to see, hey, like, is there something you're not thinking about? Are there issues in your historical tax returns just because they haven't been audited, haven't been serviced, et cetera? So for those that don't feel as confident, at the end of this conversation, maybe as they did at the beginning of it, in what they've got in place, if you visit harnesswealth.com, we've got a special offer for Marcia's listeners. So you go to harnesswealth.com/Marcia, Marcia. You will have not only, again, an opportunity for a free discussion with advisors to sort of see if it feels like there's value add to be captured, but also $100 off, the first year of tax compliance services as well.
Love it. Very generous. Thank you so much. I appreciate that. And I know that, listeners, it doesn't hurt to reevaluate. And this is, again, a perfect time to reevaluate what you're doing as we wrap this year and go into the next year to make sure that next year is going to be a lot stronger. So, perfect opportunity again to reevaluate and say, do I have the right team in place that's helping me to grow my company? So, well, thanks for tuning in today. I hope you picked up some valuable insights and some actionable ideas that will help you make your business more profitable. And I know that on the financial realm, the tax realm, and the opportunities that you may be leaving on the table, and the data that can help you make better decisions is really an important place to start. And I would encourage you to take David up on his offer. And as I mentioned earlier, if you want to take your business to the next level, don't forget to go grab my free Profit Booster playbook at boostingprofit.com, where I break down the steps to drive profits, streamline your operations, and prepare your business for a future growth. And while you're at it, don't forget to subscribe. You don't want to miss future shows. You can always catch Profit with a Plan on any of your favorite podcast platforms, and we're looking forward to more great profitable information on next week's show. So until then, make your plans and profit with them. Thanks so much, David. This was wonderful.